everybody. Welcome to another episode of True. I'm your host, Nick Gelfand.
And I'm Leslie Lambert. And today we have a guest with us. We have Joni Miller, who's with First Niagara. Hi. And she's here to discuss a special loan product that you may not know about called Mass Housing. Welcome, Joni.
Thank you.
Thank you for coming today. So, Joni, tell us an overview of what Mass Housing is.
Mass Housing, most people think it is for first-time home buyers, but so long as you haven't purchased a home in the last 3 years, you can go Mass Housing. Most of my customers that use the Mass Housing product have a small down payment, which you can go as low as 3%. When you use the FHA product, you're looking at 3.5%. That might make a big difference to some people. Mm-hmm. Also, the biggest benefit to Mass Housing versus FHA, which is usually the two products that a customer would choose to pick, is their private mortgage insurance. For folks that don't know what private mortgage insurance is, it's lender's insurance against default. It picks up where God forbid, you should get foreclosed on. It helps the lender, and it also helps the customer so they don't have to carry that debt around.
And it's required on a good many loans.
All loans with less than 20% down.
So it's not something you can opt in or out of. Usually it's, you know, if you're not putting 20% down, your mortgage, regardless of what type of mortgage it is going to have PMI, private mortgage insurance.
Absolutely, that's correct. The biggest advantage to Mass Housing's private mortgage insurance is it actually protects the customer, which is one of the rare times that private mortgage insurance does this. If you should become unemployed and you collect unemployment, Mass Housing's insurance will pick up your principal and interest for up to 6 months for the first 10 years of the mortgage. So let me sort of explain how that works. Let's say, God forbid, 2 years into the mortgage, you lose your job, you collect unemployment. Mass Housing will pick up your principal and interest. Let's say you're unemployed 4 months, for the first 4 months. 8 years later, you become unemployed again. You still have 2 months left on the clock. So there's no other, if you go conventionally, FHA, Mass Housing is the only one that does this. So it's a fantastic product even if you have 5% down or 10% down. Their private mortgage insurance is also, they self-insure, which means they do not go out to another insurance company to make that decision. So under normal circumstances with a conventional mortgage, we approve the loan or the lender approves the loan, then they have to go to another level to get their private mortgage insurance, and then it gets approved. Once your loan is approved through Mass Housing, so is the private mortgage insurance. It's a one-step process. It is also far below, the cost is below anything that FHA.
That's what I was going to ask, is the private mortgage insurance less expensive?
It's way, and you wouldn't think it would be because it's got such big benefits, but it's less expensive than if you put 5% down conventionally, and it's far less expensive than going for FHA.
So to put that in really simple terms, you're going to save money every month, right?
You absolutely
potentially knocking your payment down.
You know, on Mass Housing's interest rate is generally slightly higher than your conventional rates or your FHA rates. However, if you look at an overall payment, because the private mortgage insurance is so much less, it's going to be far less. Now let's just talk about some things that Mass Housing can do and can't do. If you make, they have income limitations. So if you have two borrowers making, say, over $100,000 a year and you need both incomes, then you would not be a candidate for Mass Housing.
So what is the cap?
$90,900, I believe that's in Hampden County. So you want to take a look at that, then we would have to come up with a different alternative.
How much is it for an individual while we're still on that subject?
That I'm not 100%. Well, individual is the same. It's $90,900.
Oh, okay, so it's the same for
period.
It's
per
the
loan.
Same per loan, right?
Per loan. So if you make more than, let's just round down, if you made more than $90,000 as a family, whoever's applying for the loan, then you're probably not a good candidate for Mass Housing product. You're going to need to use a different loan product.
The other thing is, with the 3% down, Mass Housing's credit scoring is far higher than, say, FHA. So you need to have at least a minimum of a 680 score. That is not to say you need a 680 score to purchase a home. You can go far lower than that for FHA, but it's a benefit to you if you do have good credit that you go Mass Housing, because again, that private mortgage insurance is cheaper and it's more beneficial to you. The other thing is, with Mass Housing, their ratios, that's how you qualify, how we look at it, your debt to income. With Mass Housing, they only allow, with the 3% down, 42%. So you need to be able to be well qualified. Where if you go, say, FHA, your debt to income can be slightly higher. So there is a lot of good benefits, but what a good lender will do is look at the overall picture of the person applying for the mortgage and help them make a determination of which product is going to be better. All things being equal, if the person applying for the mortgage had the credit and the ratios and met the income guidelines, the Mass Housing would probably run $80 to $150 less, depending on the size of the mortgage, than an FHA mortgage. So all things being equal, the Mass Housing would definitely be a better choice. What I usually do is just a simple piece of paper, a line, and show people the difference and let them make their own determinations.
Yeah, but I mean, you know, $100, let's just say $100 a month, that's a good
$1,200 a year.
It's a huge savings.
That can pay that could be your real estate taxes, that could be your gas and electric bill, that can make a big difference. So I think a lot of people are not aware that there's this product out there, and even if they are, they're thinking, as Joni opened with, that it's more of a first-time home buyer, assisted home buyer kind of a thing, and that's not at all the case. I think maybe the name Mass Housing kind of gives that initial impact. But so to recap what Joni's telling us, if you have decent credit and you're not overloaded with debt and you're within the income qualifications, then you are probably a really good candidate for Mass Housing. And even if you're putting down more than the 3% that is their limit, you've got this private mortgage insurance benefit that no other product carries.
Now, the other thing it's very helpful with is being that a lot of your first-time home buyers are going towards the condos again. I'm seeing a huge increase in my condominium business.
Condos can be hard to finance unless you have a conventional loan. So.
That is correct. With FHA today, unless the condominium is FHA approved, you cannot use FHA. Mass Housing follows the agency guidelines, Fannie Mae and Freddie Mac guidelines. What that means to the customer is that we have a condo questionnaire. We present that to the management company of the condominium, and it so long as it meets those guidelines, we now can go with just the 3% down on the condo. So it opens the door for many, many people to now begin to get into those homes.
Yeah, that's great, because we did see a big fallout when those requirements changed. It was years ago now that they changed. I don't remember how long, but for condo purchases. So if you're a buyer like myself, I happen to own a condo, who had less than 20% down, and FHA was your best qualification, there's not that many, at least here in Western Massachusetts, condominium complexes that are already qualified on the FHA list. It's dropped every year. And so this, if you're considering a condo purchase, awesome.
It's a great way to go. Awesome. And a lot of people, a lot of realtors, a lot of people just are not familiar that this is an alternate product. So this is going to open the door up for you to start seeing some influx of these. The best way to find out if you're a first-time home buyer or just a home buyer who hasn't had a home for a while, to see what type of product you are qualified for, is to call a lender who offers Mass Housing. And do keep in mind that not all lenders offer Mass Housing.
Right. Well, so why don't we just have them call you, Joni?
I think that would be perfect.
How do they get in touch with you?
Exactly, with numerous convenient branches around Western Mass.
Okay, yes, First Niagara does have a lot of convenient branches. The best way to reach me would be to call my number, which is 413-627-2388. and I can look at your income, your assets, your pre-qualification, and help you make a decision of what type of mortgage is going to best suit your needs, and then you can go out and look for a home.
That's wonderful.
Now, Joni, my question is that mass housing has been around for a while as a loan.
Oh my God, mass housing's probably been around 80 to 100 years. It's not a new program at all. They have the lowest foreclosure rate in the country because they've always maintained their same standards even through everything that has happened. So it's a safe, good product for a consumer.
So my question with that is, why have we just started kind of hearing about it in the past year or so? Has there been changes in mass housing, or is it the changes that were implemented with FHA that have kind of driven people towards mass housing?
I think what you're really seeing, Nick, is that there's been such a huge change in FHA. You're seeing their private mortgage insurance increase to make it maybe even.
What are some of the, other than the private mortgage insurance, what are some, because it was April 1st, I believe, there were some changes to FHA loans?
Most of those changes were primarily increases in their private mortgage insurance that would affect the consumer. So mass housing is just becoming a bigger and better part of the lending community than we've had before. We're also just seeing a lot more advertising on it. I think they are getting out more to the community and starting to talk to people more. So I think all in all, it's just a combination of the fact that FHA is becoming much more restrictive and mass housing can pick up where some of that is left off.
So mass housing has always been 3% down, where FHA has always really been around 3.5% down?
Correct, and mass housing has always self-insured and has maintained their fairly stringent guidelines. They really want, their goal is to keep people in houses, not to, I mean, that's why their private mortgage insurance helps you out if you should become unemployed. They pick their ratios, their debt to income guidelines by what they see is a benefit to the borrower. If you're much past that, you really can't afford to do this in their eyes. So their whole goal is to put people in homes and keep them there, and that is something they do extremely well.
That's wonderful.
Yeah, I'm a huge fan of informing my clients about MHFA because it just seems like for most of my clients, which are first-time home buyers, it is the best solution. I'm also a licensed broker in Connecticut, and Connecticut has a Connecticut housing program,
Correct,
which I find to be nowhere near as even comparable to MHFA. It tends to be. I
can't really talk on that one because I'm not very familiar with the CHAFA program, except that we do offer it, and that's something you folks are interested in informing your customers about. We can certainly get you an expert.
Right.
Not me.
Right. But just, for folks that are not in Massachusetts, every state does, at least from what I've seen, tends to have a program of some sort.
Mass Housing's product tends to be one of the easiest for the consumer to go through because the lenders that can do mass housing have the authority to close the loans themselves without going to the agency for their approval. They just follow the guidelines set forth, whereas many of the other state programs, such as CHAFA, have to actually go to the agency for the approvals, which makes the process tedious at
Lengthier.
best for the customer.
Because they have limited underwriters on their end.
And so with mass housing, it's basically the same for the consumer as doing any other type of standard loan. So they're not feeling any more pressure than they would.
Well, Joni, thank you so much for joining
Oh,
us
it's
and
my
explaining this great product.
Absolutely.
If you have any questions, please reach out to Nick, myself, or Joni. We're all here to help. And thank you for watching another episode of The True Show. I'm
Thank you.
Leslie Lambert.
And I'm Nick Gelpan.